Hey, good morning. Jayaram here from Almus Market Morning. What a day we had in the US yesterday with US CPI beating all expectations. All hell broke loose in the markets. Initial sell-off in stocks was actually retraced before James Bullard, St. Louis Fed member, a known hawk, made extremely hawkish comment saying that the CPI numbers had made him dramatically more hawkish and expected 1% hike by July. After this, major stocks lost 1.52%. Dollars sell-off against euro and GBP reversed sharply, and bond yields soared with 2-year roaring through 1.5 and 10-year through 2 without any resistance. The majority now expect a 0.5% hike in March, while there have been whispers of an intermeeting rate hike by Powell. Euro, which had rallied to a new cycle high at 1.1495, slumped after ECB member Lane and Lagarde doused near-term rate hike expectations, with both anticipating the price pressures to ease. GBP has been relatively stable, as expectation in UK is for another 3 to 4 rate hikes from BOE. Yen stood out with steady weakness after Bank of Japan officials said they would buy an unlimited amount of 10-year government bonds. After a month and a half into the new year, dollar is yet to settle into a firm trend as the conflicting forces play out, even as market is still pricing in the policy probabilities in various economies. In India, we had two big policy events this month, and neither of them has been of help to the rupee. Budget envisaged higher deficit and borrowings and also disappointed on the global bond inclusion. RBI yesterday adopted an extremely dovish stance, standing out amid a world of hawkish central banks, keeping its accent on growth. Their inflation outlook for FY23 is viewed with skepticism. Central bank holding rates at the lows in the current environment may have been taken as a tacit acceptance of weaker rupee, expecting it to be eventually supported by higher growth prospects. Overnight higher than expected CPI from US and the consequent move up in yield has seen the rupee weaken to 75.30 in offshore trades. Expect some more weakness even as dollar index is bouncing back and the rupee looks relatively unattractive to investors. Those stocks and bonds rallied yesterday, that should be soon reversed, and that would put additional pressure on the rupee. Expect 75.10 to 75.50 for the day, but a positive move to 75.80 during this month is not ruled out. One parting thought for global policymakers: current inflation is supply shortage driven and not so much of demand driven. Hence, equally concerted effort is needed towards easing supply chain issues rather than contemplating big hike in rates, lest they push economies into recession. Perhaps there is a cue here from the Indian policymakers. Thank you. Have a nice day and have a nice weekend as well.
Hey, good morning, folks, and thank you, JK. I believe the last thought was quite different from what we are hearing in the markets and quite different. At the same time, TGIF, I wonder if we should be saying that with the kind of volatility that we are seeing, and a lot of market participants would be wanting to have a weekend breather. Coming back, as JK mentioned, US posted quite high inflation, and the resultants were the choppy currency markets as well as the bond market, which went on an edge. A wake-up call for a lot of bond players, even on the Asian and South Asian fronts, was seen. The bond sell-offs extended across geographies, for example, New Zealand, Australia, Thailand, Malaysia, US, everywhere. So these turbulences point at the struggle of digesting the stimulus withdrawals from the pandemic recovery. We also saw, and as we had already talked about, that Indian Central Bank had their policy meeting over the past 3 days, and the stance of RBI maintaining a status quo was a bit on the divergence front from what the market expectations were, and the policy rates and lower inflation expectations still continue to be a question of the thought for RBI. The primary reason for keeping interest rates low was the forecast of CPI inflation for March 23 at 4.5% areas. Indian inflation is suppressed majorly due to the oil price pass on, or the service inflation being not yet passed on to the common people. So it needs to be seen whether the determinants are still showing whether the inflation exists or not. There were many developmental announcements along with policies, such as the increase in VRR, which is voluntary retention route, by uh, almost 1.5 lakh crores, from 1 lakh crore to 2.5 lakh crores. CDS guidelines have also been reviewed and reissued. Bonds, banks have been allowed to deal in offshore rupee interest rate derivatives as well. Now, the Indian 10-year G-Sec yields are at 6.72% against the previous close of 6.8%. On the crypto front, there's another celebrated personality who questions the underlying value concept of crypto. And this brings me to the thought of a lot of financial instruments which have been used as an exchange medium historically, whether they had any sort of underlying value at all. Cryptos, like we have been seeing over the period of time, had some recoveries in prices, which after a good 40-50% correction in the past month is giving a lot of crypto players a breather, hopefully. That's it for today, folks. Have a great weekend. Thank you.